Why can't I buy health insurance anytime I want to? Hi, I'm Kevin Canals with InsureMeKevin.com, and a lot of people are frustrated that they just can't enroll in a health plan whenever they want to. Like in the olden days, in a land far, far away before the ACA, you could just put in an application for health insurance anytime you wanted to with any carrier that you wanted to. Like when you bought a new car or used truck, and you could just call up your insurance agent and say, hey, I want auto insurance. Or if you bought your dream home, you could call up an insurance agent or a carrier and they would get you an application and enroll you, and it would just start virtually immediately at the beginning of the month. Well, you can't really do that with health insurance, especially now that we have evil Obamacare. They made that go away. But why would it go away? Well, in a land far, far away, when you applied for health insurance and you may have been enrolled, but sometimes you may have been denied because of that unexplained rash on the back of your leg. We know where you got that rash, but the insurance company didn't, and they said you were too high a risk, so they wouldn't give you a health plan. Well, evil Obamacare made that pre-existing condition or any of those other medical oddities where the health insurance company would say, well, we'll cover you if you're in a car accident, but we're not going to cover you for that weird rash that you sometimes get. They can't do that. They can't do that. So with the Affordable Care Act, individual and family insurance became more like group insurance, where there's an open enrollment. When you are first hired, you can get onto the health plan. During open enrollment, you can change plans. And during the year, if you have a qualifying life event, you could add people, like if you got married or a birth or something of that nature. But of course, qualifying life event was being hired. So the individual and family market is more like group insurance. Because one of the things that the insurance companies demanded with the ACA, if they were giving up being able to deny people because of that odd rash they had in 1995, was they wanted everybody in the insurance pool to be paying premiums, because it's the premium dollars that pay for the health care. Now, when you get your home insurance and there is an accident or a flood, and the insurance doesn't start until tomorrow, the health insurance is going to help you. If it's flooded, you needed to have flood insurance in place before the flood occurred. So all of this comes down to adverse selection. So adverse selection is getting insurance, home, auto, car, after you have already had an injury or an accident. And then what oftentimes happens is that people will drop the health insurance after their injuries have been, repaired and they're back to work. So like these gentlemen jumping off a bridge, they do not have health insurance. But if they break their back, they would like to get some to get recuperated and have that surgery paid for by the health insurance. But the health insurance companies and most of society wants them to have health insurance before they jump off the bridge. Or these old men who think they can ski and they fall and they break something. Well, it's better if you have health insurance to begin with, because health insurance is not retroactive to when your illness or accident happened. So the whole point of having these enrollment periods, open enrollment, special enrollment period, is to get away from, to prevent the adverse selection so that people just can't get into a health plan, have their care taken care of, maybe the bulk of it, and then drop their health insurance in a few weeks or a few months after they're back to jumping off bridges or skiing down hills. So what is a qualifying life event? A qualifying life event is loss of coverage. If you lose your job, move a job, then that qualifies you to get into covered California, or also when you start another plan or to get onto your spouse's plan if you lose your insurance. Divorce, that would lose coverage. When someone turns 26 and they can no longer be on their parents' plan, that would be a qualifying life event. If you move into California, get married, domestic partnership, there can be some little things about that. You technically need to have had insurance 60 days before you moved into California. Otherwise, you didn't have health insurance. Birth or adoption, that will start immediately on the day of the birth of the child. If you're released from jail or just get out of the military, that's a qualifying life event. Domestic abuse and spousal abandonment is a new qualifying event, relatively new in California, that you can apply for. So you can be separated from your spouse's health insurance and have your own and get the care you need. Gaining citizenship. Starting to drive for an app-based service like Uber, Lyft, DoorDash, that can be a qualifying life event if that app is participating in, I think it's Prop 22, that will provide a stipend for the health insurance. There can be other circumstances declared by Covered California, wildfires where they open up for a special enrollment period. COVID is a special enrollment period. So natural disasters. So those things are kind of at the discretion of Covered California and sometimes the federal government. Don't assume that because Covered California has a special enrollment, that the carriers, Blue Shield, Kaiser, HealthNet, China's Community Health Plan, will also mirror that special enrollment. Right now, we have a special enrollment for the American Rescue Plan in California through the end of 2021, but that isn't being honored by the carriers in the sense that you can just enroll. All of the qualifying life events for theirs still apply. So you need to look into that carefully. Just don't make any assumptions. Now, there is one other way you can get insurance. Loss or decrease of income doesn't necessarily make you eligible for a Covered California health plan, but Medi-Cal is open year-round. So if you lose your job, you didn't have health insurance, we can go through Covered California. You can be determined eligible for Medi-Cal and then move into that system. Now, when I say loss of coverage, I also want to clarify that it must be an involuntary loss of coverage. You cannot voluntarily cancel Medi-Cal and then get a plan. It doesn't work that way. You cannot voluntarily cancel your group plan and then go to Covered California. No, it has to be involuntary for the loss to have occurred for the qualifying event for the special enrollment period. Everyone wants to prevent adverse selection because it costs the insurance companies money, which then translates into higher premiums for consumers. So because if you have a lot of people getting in anytime they want to, getting their surgeries covered or whatever it happens to be from jumping off a bridge or sliding down a snowy mountain and then dropping the coverage, and the insurance company spent, $50,000, $100,000 on you, other members in the pool are going to have to absorb those costs sooner or later if enough people do that. So before you end up out there in the wilderness and you need to have the fire rescue team, search and rescue team come find you, have health insurance, because if you don't and you do need healthcare services, you cannot get a health insurance plan unless it's Medi-Cal. So hopefully that kind of explains some of these odd special enrollment, open enrollment periods and why you just can't buy health insurance anytime you want to. If you have any questions, go ahead and give me a call. Contact me through my website. This is Kevin Knaust for InsureMeKevin.com.